Welcome back to the closing trades. We have now joining us Deven Choksey. Uh, Deven, how do you see this market? It's pretty flat from an index point of view, but there's individual stocks which are buzzing, and especially in the last 1 hour, we have seen private sector banks, giving a rebound for the market.
Hi, good afternoon. Well, I think selectively the market is supposed to will move because coming from the result season, I believe that I think most of the companies, including the banking sector that you have mentioned, are definitely confirming that their second half of the financial year is definitely working out better for them compared to first and second quarter. Second quarter definitely remained better compared to first quarter, but the second half of the financial year remains very promising. Few reasons on the banking side, particularly the liability side. I think is coming. The cost is under control. That means that it's a lower cost of funds. I think they would be getting it and enjoying. On the other side, I think they are getting the larger amount of traction in form of MSME and SME loans, which was probably not the scenario in the first two quarters. Definitely, the retail loan segment I think is continuing to do well for the likes of ICICI and Bajaj Finance kind of companies. I think they certainly work out very well. So, in my viewpoint, I think all summing up together, most of the banks are today available at a valuation which is not expensive, given the kind of 15% kind of underlying growth promise that we carry in those companies. So, I think that's the reason for which I think this could be the sectorial rotation also which is happening currently, and this could be the reason for which I think you are seeing the traction into the banking stocks currently. But I see it a distinct possibility. I think across the sector, selective stocks are likely to gain the traction in coming days, as I see it from now on.
Space, it has outperformed private sector banks in the last 1 month, and given you know good returns compared to them. Do you see further run up or steam left there?
So, from a valuation perspective, yes, I think they are undervalued. On a business case basis, I think it is basically being the tailwind is largely coming in from the government's intention to consolidate some of the public sector banks further. Having done one round of consolidation in the first phase, that is 2019 around, I think the second round of consolidation is likely to happen now in this particular period, 25-26. So maybe I think that is one of the reasons for which I think this is driving the stock price as well, given the valuation. At the same time, I think government's intention to bring in the foreign investment is also basically going well, because I think those investors would come with money back. Probably, I think the business conditions could possibly be seen much better by them and execution thereafter. So we are relatively more confident about the possibilities at this point of time. Fundamentals not bad, but at the same time, I think given these possibilities, they could possibly perform better in incoming days as well.
Almost at the end of the second quarter earnings season, on the whole, how do you see the entire earnings season how it panned out? We began the earnings season when on a very muted and a cautious note.
Yes, I think a couple of key takeaways in general. On one side, the cost factor has remained on a controlled downside. Most of the companies have reported better profitability than anticipated, including the large caps and among the mid caps as well. So I think the profitability factor has played a major role because of the cost has remained under control. Second part, interest cost also has remained under control, and as a result of which, I think it is not showing up in the balance sheet even after the EBITDA level. So that way, I think the companies have reported better numbers. Um, on the top line front, majority of the companies have remained promising for the second half of the financial year, though I think the first half of the financial year has had their own problems in form of, I think, some part of the businesses. But I believe that I think given the kind of direction that we have received from majority of the companies, we see distinct possibility of successive growth in third and fourth quarter in the revenue top line as well. So along with the growth in the top line, with the control expenditure and better profitability, we see finally financial year 26 ending on a better note compared to previous years.